wants an HSA update. You want an HSA update. Well, at least I think you do since you clicked on the video. Well, here it goes. I have an HSA, or a health savings account, through my employer because I have an HDHP with them, which is a high deductible health plan. Now I'm going to skate past what all an HSA is because you can find information on HSAs out here on YouTube, or you can do a simple Google search. But as a quick reminder, an HSA has a triple tax advantage. Contributions are pre-tax or tax deductible. Your contributions grow tax-free, and you can withdraw tax-free for qualified medical expenses throughout your life, though there is a benefit for hanging on to this account into retirement. My 2021 goal was to contribute as much as possible to my 2020 HSA, and not even to max it out, but since the tax deadline had been moved back a month, that got me thinking. The 2020 HSA contribution limit is $3,550, and when I solely started contributing to my HSA after maxing out my 2020 Roth IRA, I contributed $324.88. 100% of that was through my payroll. And since the time had come to contribute more, I wanted to know the best way to contribute to my HSA, so I started learning more about it. As far as my HSA goes, I cannot front load or back load the HSA. An example of this would be through my payroll to dump a large amount into my HSA through my upcoming paycheck. So say this next pay period, I said, out of that paycheck, take that $35.50, which let me just make it clear, I do not make that at least that amount per paycheck, but this is just an example that I could take that $3,550 on this next paycheck and put it into my account. I can't say put $1,000 into that account and $1,000 after that and $1,000 after that per pay period up to $35.50. What I would have to do is input the amount I would like to pay over the year, and that would be divided out over the remaining pay periods. Going through my payroll is one way. Making direct transfers from my credit union is another way. So thinking through this a bit, when I make direct contributions from my credit union, those contributions are reportable on my tax return and reduces my taxable income. But from what I've read, that tax advantage doesn't apply to payroll taxes. So we already know that contributing through your payroll causes your contributions to be tax-free. And from what I've read, you are still able to report your HSA contributions on your tax return, but you're going to lose a little bit of that tax advantage because of your payroll taxes. So in this way, in order to get the full benefit, it may be worth it to consider contributing through your payroll. I mean, it could make or not make much of an impact. But wait. You'll also want to consider what waiting on those deductions from your payroll could have on your potential gains as well. Say you have the $35.50. Now, 2021's contribution limit is $3,600. It may make sense to go ahead and make those direct deposits and start investing with it as opposed to waiting on your payroll deductions and contributions. Now, I did a little bit of both. I was working toward a threshold and a deadline. I adjusted my payroll to contribute as much as possible via that route and also began to make my own deposits. Now, any payroll contributions I make in 2021 are going toward my 2021 contribution limit. So you may be asking, then why do that if you're trying to max out your 2020 HSA? In making my contributions this way, my HSA is fully triple tax advantaged, and I'm getting closer to the ability to use my HSA as an investment account. More on that later. And I also wanted to toy around with adjusting it to see how it would affect my future pay. In order to make my own deposits, I added my credit union information. I had to verify that account before being able to make transfers. That took a couple of days, just so you know. Once I made enough transfers to get past the $1,000 threshold that I mentioned in this video, I applied for an investment account. Once being approved for that account, I was given access to the list of investment options, and I was elated to see VTSAX on there, among other Vanguard options. So, anytime my deposits hit, whether from my payroll or from my credit union, I would transfer that into my investment account and invest in VTSAX. You may be able to automate this as I have. Anytime my HSA balance is over that $1,000 threshold, any amount over that gets automatically transferred into my investment account. And then from there, my investment account is set up to allocate 100% to VTSAX. So though I wasn't necessarily planning to, I decided to dive in and fully max out my 2020 HSA. This wasn't even one of my 2021 goals, but what can I say? I couldn't resist. So as I mentioned before, I had a 2020 contribution balance of $324.88. On March 17th, I transferred over $500. On March 23rd, I transferred over $2,725.12 to reach my goal of $3,550 in that 2020 HSA.
Yay!
So, what's next? Well, that's enough for today's video. My next yearly goal is to max out my 2021 Roth IRA, but I'm in the baby steps where I can do 4, 5, and 6 simultaneously. Of course, 5 doesn't apply to me as I don't have children. So I'm balancing a few options here. If not in my next video, the one after that, I'll be breaking down my next steps. So stay tuned. Make sure you're subscribed and you have your notifications on so you know when I post a new video. Thanks for watching. I love you. Bye-bye.